Li Auto just tumbling today, down 17%, on pace for its biggest drop in nearly 2 years after reporting a profit decline on higher expenses. Phil LeBeau joins us now with a look at the struggles of what we're seeing from these Chinese EV makers, Phil.
Well, it's what I think a lot of people expected when you take a look at the quarterly results. And we're going to talk about BYD and Li in just a little bit. Let's start first off with BYD, which also reported quarterly as well as first half results. And you look at this, you say, wow, net profit of $1.9 billion. That's up 24% compared to last year. Revenue increasing by 16%. But it's not growing as quickly as it has been in previous quarters. So perhaps that's a little bit of why people are maybe pulling back just a little bit on BYD. You see the stock is down just under 3% on the day. First half sales, by the way, up 27% year on year. They are not number one worldwide in terms of pure electric vehicle deliveries. Tesla remains number one worldwide. And take a look at who the leaders are. We're going to show you the first half stats. We're still updating the first quarter stats. The first half stats we're still updating. But generally speaking, these are the leaders when you're looking at global EV sales, pure EV sales, which, by the way, were up 20% this year in the first half compared to 2023. Quickly want to talk about Li. Its Q2 net profit, $154.4 million when you take, the Chinese yuan and then you convert it over into dollars, with revenue increasing 11%. What you're going to see from all of the Chinese automakers, they are growing, but their market is slowing down at home, which makes it a little tricky for them. They are increasingly depending on sales in foreign markets. Europe has been red hot for them. Southeast Asia is an area that is growing, not just for Li, but BYD, all of the Chinese EV companies. And that's going to be an important focus for them as the Chinese market becomes not just saturated, but it's just generally slowing down in terms of EV demand, in terms of the pace of growth. Still growing, just not growing as quickly as it has been in previous years.
I mentioned it earlier with my oil guest, Phil, but, the concerns over Chinese demand, consumer spending is percolating in a lot of different industries right now. Is there a reason why that might hit the Chinese EV makers harder than it is Tesla or some of the other EV makers?
I think it's going to hit them all equally, Contessa, if you want to know the truth. And when you look at the Chinese market and you talk with the people who spend a lot of time in that market, studying the various companies, talking with the executives there, remember, a big part of the demand in China when it comes to electric vehicles, it's been fueled by government incentives. And whenever the government pulls back on those incentives, you see the demand slow down. It's no different there than it is in other markets. You pull back on the incentives, people are not going to be as likely to buy them. Now, granted, China's further ahead in terms of EV adoption than almost every other market in the world, but it still is, dependent to a large extent on whether or not there are government incentives.
Phil LeBeau. Thank you, Phil.